SunRun reported earnings the other day, and although they beat on EPS, revenue lagged. As a result, the stock gapped higher, only to close the day on Thursday lower. It did come up to the 200-day moving average. That could have been a reason why we had the sell-off that we saw, and then the continuation into Friday. Now, going back to, let's just go up to the weekly chart, and we're going to dissect the markups that I had, I guess, from previous months. But before we get into that, let's get into this article. This is coming from Investor Place. Run stock price prediction. Can SunRun really rally 80% from here? According to one analyst, Scott, from Montgomery Scott, analyst Thomas Merrick thinks it can. And he has a price target at $32 per share over the next year. That represents roughly 80% upside from where it's currently at. And here's what he says. Positive SRUN posts an operationally solid quarter, beating customer additions, expectations, and reiterating its stance for continued margin expansion over the next few quarters. Now, the latest SunRun earnings report saw its adjusted earnings per share and revenue come in at 25 cents and 590 million. Wall Street was expecting a negative 35 cents per share on 631 million. While those results are mixed compared to estimates, the surprise profit during the quarter has investors excited today. All right, so let's just go back to we're going to start with the monthly chart. And we do see a bottom at $8. To be honest, I'm not sure why I had this $12.71 line here, so we'll just take that off. But we do see a bottom in the stock at $8. Now, I have a weekly bias level at 18.30. So let's just go down. It must be this level here. Let's go down to the weekly chart so we can see that. Okay. All right. So at the price bottomed at $8, price rallied higher, but then paused and then broke out on significant volume. So that's why I had the weekly bias level here at 18.30. Just scrolling back out to the monthly chart. Okay. So this band, this white band, represents resistance, support. All right, let's go back down to the weekly chart. And we can see that price was holding not once, twice, three times. However, when price broke out to the downside and closed below the band, I anticipated price continuing its downward trajectory as the weekly bias level at 18.30 was used up, right? You can see this hammer candle penetrated the zone 100%. Probably wasn't any remaining unfilled buy orders, which is why you saw price close hard towards the bottom of the zone, only to pull back to retest and make lower lows. Now, I'm going to take several things off the chart. All right. So potentially it looks like price on the weekly chart suggests a reversal's underway. Let's map that out. High, low, lower, low, lower, lower, high, lower, low, higher, low, higher, high, higher, high. All right, let's do that again because I think I screwed up. We got a lower, low, lower, high, lower, low, lower, high, lower low, higher high, higher low, higher high. See the W pattern right here? So let's draw a line between 22 and the most recent low, we'll just say at 14. What I anticipate is that we're going to have some consolidation. I don't know, till the fourth quarter. Let's go down to the weekly, daily chart. We got to get above the 200-day moving average. That's going to be your first sign that the reversal pattern is evolving. Until that happens, you can anticipate just sideways price action. And I don't see any significant volume, which also indicates we're going to just trade sideways until we get that next catalyst. Nevertheless, if I scroll back up to the monthly chart, price is bottoming. We saw the first signs of a reversal on the lower time frame, but we need some more price action conviction before definitively going long again. Thanks for watching. Subscribe, please. Like the video. Might as well put a target, Scott's target, at 32 in the next 12 months. Until next time.